Motilal Oswal Financial Services. I would like to welcome you all to discuss 1Q FY24 earnings of Action Construction Equipment. ACE is represented by Mr. Saurabh Agarwal, Executive Director, Mr. Rajan Luthra, Chief Financial Officer, and Mr. Vyom Agarwal, Senior Vice President. I'll hand over the call to Mr. Saurabh Agarwal for his opening remarks, post which we'll start with Q&A. Over to you, Mr. Agarwal.
Yeah, thank you. Good evening and welcome everyone to this earnings conference call for discussing the results for the quarter ended June 23. Along with me in today's earnings call, we have our CFO, Mr. Rajan Luthra, and our Head of Investor Relations, Mr. Vyom Agarwal. The company's financial statements and earnings presentation summarizing the performance of Q1 FY24 have been circulated and uploaded on the stock exchanges, and I will take you through some of the key highlights of our performance in the quarter gone by. The company has maintained its growth momentum in the first quarter of the current fiscal year. This has been yet another quarter of strong and resilient performance by our company, and I'm delighted to share that the financial year has started strongly for us. We were able to record our best ever quarterly performance in terms of revenues and profits, and also for the first time ever, our Q1 results have surpassed the preceding Q4 numbers. To brief you on the financial performance of the first quarter, FY24, on a yearly standalone basis, that is year-on-year basis, the operational revenues grew by more than 30% to 650 crores with an EBITDA margin of 15%. The EBITDA during the quarter increased by more than 113% to 97.5 crores as against rupees 45.72 crores. The PBT grew by 125% to 89.23 crores and PAT grew by 133% to rupees 67.26 crores as compared to last year's corresponding quarter. The PBT and PAT margins now stand at 13.72% and 10.34% respectively for the quarter on standalone basis. On a sequential basis, quarter on quarter, the revenues are up by 6%. This is one of our most robust performance given the anecdotal evidence of our sales trend in the first quarter. The EBITDA, PBT and PAT have increased sequentially by 20%, 22.5% and 29% respectively. Moving on to the segmental business performance, the company has sustained its growth momentum across all operating segments. In the crane segment during the quarter gone by, we reiterated our dominant market leadership position and registered revenue of 441 crores, which is up by 26% year-on-year. In volume terms, the crane business has grown by 17% year-on-year to 1856 cranes in the last quarter. We are pleased to update that the growth momentum in the CE segment has sustained, and we have again surpassed our projected growth targets. The segment has registered a volume growth of 80% year-on-year. Further, as compared to last year's corresponding quarter, the CE segment, construction equipment segment, clocked a revenue growth of 78%, and we achieved revenue of 92 crores with margins in excess of 14%. This is a testimony to our clear and compelling strategy backed by the strength of our brand. The metal handling segment recorded revenue growth of 10% and stood at 41 crores with margins at 10.17%. And our agri division registered revenue of 75 crores while recording margins at 6%, thereby registering a growth of close to 30% year-on-year. Further, we were able to attain good traction in the overseas markets and increase our exports. We are on track to attain around 10% contribution to our revenue in the current year from export sales. On the operational side, India has remained stable in the continuing global macroeconomic volatility. The domestic activity in Q1 FY24 has remained resilient as reflected by various economic indicators. The healthy balance sheets of corporates, normalization of supply chain and stable commodity prices are favorable for continued growth in the sectors where we operate in. The manufacturing activity in the country has been on the upswing, aided by positive geopolitical scenarios in favor of our nation and continued focus of our government to increase the manufacturing progress of our country. According to data released by S&P Global Market Intelligence, India's manufacturing activity as measured by Purchasing Managers Index, PMI, was at 57.7 in July as demand scenario improved and new orders increased. The enhancement in manufacturing capabilities and capacities of our country will further aid in the growth story of our company, as manufacturing segment is one of the prime consumers of our cranes and material handling segment equipment. The infrastructure growth story continues to play a significant role in the economic growth and will have its multiplier effect on the economy. We believe that going forward, the strong demand scenario for our products should sustain itself, supported by government's unwavering focus on urban infra and rural development. And the front-loading of capital expenditure announced in the Union Budget 2023 will further aid in the current year. We continue to be a debt-free company with sufficient availability of liquidity for future growth. The envisaged brownfield capex of 90 to 100 crores for the current year is already under implementation, and we expect to make the expanded as well as the new facilities operational by Q3, Q4 of the current financial year. This capex will expand our capacities and will enable us attain revenue in the range of rupees 4,000 crores at full utilization levels. Looking ahead, India is one of the fastest growing economy, and its prospects remain very strong for the period ahead. With continued focus of government on infrastructure development and efforts to strengthen the manufacturing sectors, we hereby upgrade our earlier guidance and expect a growth of at least 20 to 25% on consolidated basis. In the cranes and agri segment for the current year, we foresee a growth of 18 to 20% at least. Further, we expect the construction equipment segment to grow by at least 45 to 50% and metal handling to grow by 15 to 20%. We hope that we are in a position to revise these projections by the third quarter, which will predominantly depend on the overall macroeconomic scenario, especially the monsoons and the commodity prices. Further, we remain optimistic about the medium to long-term prospects of our company and remain focused to deliver on our growth agenda. We will continue to drive cost savings harder and take calibrated pricing actions, whilst ensuring we protect and grow our markets. We believe that our building blocks are firmly in place and are on path of sustainable growth in all our segments where we operate, leading to expansion in top line, bottom line, and margin profile of the company. With this, I would request the moderator to open the call for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of CA Garvit Goyal from Invest Analytics. Please go ahead.
Hello. Good evening, sir. Am I audible?
Yeah, good evening. Yes, you are audible.
Congratulations for a good set of numbers. My question is basically on the demand outlook on the end industry. So basically, you in your opening remarks, you mentioned about the near-term outlook. So how do you see at the medium-term and long-term perspective, like you mentioned in Q3 and Q4, you are going to do a capex that will give you a revenue potential of, I think, INR 4,000 here you mentioned. So how do you look at next 3 to 4 years down the line, sir?
If I talk of the demand scenario, we currently, our major end segments are infrastructure and manufacturing. And luckily, the situation our country is poised at as of now. The government is very much focused on manufacturing, which is very evident. And with all the PLI and China Plus One plus XYZ. And apart from that, we are also getting a lot of, to be very frank, outsourcing opportunities in the export market to manufacture for some other countries and players. So a lot of things are happening. The domestic demand and a lot of our cranes and metal handling, everything goes to the manufacturing as well as infrastructure side. So manufacturing is booming. The export potential we are capitalizing on, and the opportunities are only increasing. And infrastructure, everybody is aware what is happening, because now what is happening, infrastructure is again leading to more steel, more cement, leading to more of everything. It's a continuous cycle. So things seem to be on a roll as of now. And it's been some time that we have on a monthly basis not been able to fulfill the amount of clearances or dispatches which were required across cranes and even construction equipment. And we've been under tremendous pressure, and that's why we are expanding this brownfield expansion which we are doing. So hopefully a very small part of it should start functioning in September, most of it coming in October, November, and finally by Jan, Feb, this should be functional properly. So this will definitely help us, increasing our revenue going forward in quarter 3 and especially in quarter 4. Both of them, but I would feel more in quarter 4. And, the way things are poised, that, and the feeling and the sense that I get, and even from real estate sector, which is 10% contributor within our crane segment, which is about 67-68%. We require to make double the number of cranes what we've been doing, and we've already started reaching that level. So things are looking good, things are looking great. If I talk of it, only one bullet train construction project had started, and the second phase has just been awarded very recently. And very actively another 6-7 DPRs are already on the way. This is just one bullet train. So I think a lot is happening. The government is really focused on developing the country, developing the infrastructure, and I can say that in some sort even the capex cycle with respect to small and medium industries started happening. So when I look around, even our vendors and a lot of our customers, so most of them seem to be on the expansion drive. So they again require more cranes and more metal handling, even when they are trying to expand or do the capex. Then finally, to run that capacity, they again need more machines. So the scenario seems to be very buoyant. And to be very frank with you, the market, like I said, in quarter 1, going from quarter 4, it always squeezes a little 15, 20, 25%. But we saw the contrary. Rather, we were able to increase our revenue by 6% in quarter 1 against quarter 4. And again in quarter 2, which we are currently running into, the monsoons tend to slow down, the demand. But I've been with the company since 1998. Company started in 1995. And from day 1, I was also involved in sales. So I have never seen this type of momentum in monsoon. We were thinking that, we will load up, make some extra machines so that we are able to cater properly in quarter 3, quarter 4. But even the month of June, the month of July, we have been loaded. We couldn't save anything. Rather, we under-delivered with respect to what we could have delivered. So the momentum is very strong. Now, your main question, the last 3-4 years, I think the type of scenario which has been created in our country and the potential also, not only for us, even for the whole country with respect to manufacturing, with respect to exports and looking at alternative solutions the world is looking for, against China. I think we are greatly poised. The entire country is greatly poised to grow. So, and I hope things remain like this.
Understood, sir. That's really helpful. And secondly, sir, you mentioned about the export, right? You are saying you will reach out to 10% of the overall revenue. So what are those countries basically we are exporting to? Like in Europe, there are some headwinds going on. So might be there may be lower demand. So might be that is not the area that we are targeting. So what are those countries that we are looking for?
See, practically there are no headwinds for us because 3-4 years back we were hardly exporting anything. And this we have evolved in the last 3-4 years and still continuing to grow on it. And our medium-term target, I would say, is 10-15% of revenue contribution. And we would be, I think, comfortably we should be at 9-10%, if not more, within this year. And we are focused on some Middle Eastern countries, some African countries, recently Turkey, Mexico, Argentina and Brazil in the South American continent. Also some, ex-CIS countries, even Uzbekistan, Kyrgyzstan, and even Russia. So we are equal to about 37 countries now. So I've just given you some names. I mean, there are many more names which are smaller buyers. So, and these things have started happening in the last 2-3 years. So we're building upon it, building upon the product, building upon the service, building upon our brand in those countries. And this will all further grow from where we are. Not only our footprint in other countries where we think there is potential, but even within these countries. Because entering a market and establishing your product and your service and then growing, it takes time. It takes 1 year, 2 years, 3 years, and it continues to grow. So I think in certain countries we have started to grow and things are looking good. And like I mentioned, we are also getting a lot of outsourcing opportunities from the developed world. So if something like that, which we are sure will materialize over the next 2-3 quarters, that can again add in a very reasonable way to our top line with respect to exports. So that potential also very much exists, and we are actively working on it. Apart from what we are actually manufacturing in India, we are also for the first time making products, a couple of new products. I mean, we already make similar products, but we are upgrading them with technology and even the styling and fit feel finish, which other countries where there is demand like it away. So and that activity should also happen by December, January. So I think some part of it in Q4, but starting from next year onwards, these new backhoe loaders and new telehandlers, which are very much suitable for every part of the world, developed or undeveloped, because that is what they are used to using, and with their standard with respect to performance as well as the look, feel, styling part of it. So I think next year should be even better for us. And also that Ghana initiative with respect to export, unfortunately, it got delayed by about 2 quarters. So let's see the final confirmation we've got that something should start to happen in quarter 3. So we were expecting that will contribute in the current year to some extent with respect to our export initiative, but that has got delayed. And so maybe some part of it might come in the second half of this year, but the major chunk will start to happen from FY25 onwards. That will again add to our initiative, and all of this might lead us to 15% export contribution, which we said this year I'm sure will go to 10%.
Understood, sir. And sir, lastly on the margin side, so we are doing a decent EBITDA right now. So how do you see how sustainable these margins are for next 2-3 years? Like you are mentioning, with more than 20% growth for this year and next year also even better. So considering that, how sustainable these margins are, and secondly, what is your view on the competitive landscape for you in this industry?
With respect to margins, I think for the last 2-3 quarters I've been mentioning that double digit is here to stay for us, and now that we have reached close to 14.5-15%, I feel they are very much sustainable, and all our efforts, including the operating leverage which we are getting, coupled with our cost reduction initiatives and cost control initiatives, and also our product mix which we are trying to move towards, better margin products. I think all of this coupled together, these margins are here to stay, and I feel that there is still scope to improve these margins. But it will be better if we improve them and inform you rather than saying that yes, we are working on improving them further.
Understood, sir. Understood.
And you asked about competitive landscape. So obviously, the market is very competitive. It is survival of the fittest. And our simple strategy is right product, right price, right service. And we are very much focused there with respect to whatever we do. And we have been doing it well for the last 25-26 years. And now with operating leverage and our revenues going to a certain level, I think, market sales का एक बड़ा simple असूल है. जितना दिखता है उतना बिकता है. तो I'm sure हम सब जगह दिखते हैं. तो हम और ज़्यादा ही दिखेंगे. And we leave no stone unturned to make sure कि जिसने नहीं देखा उसको भी दिखा दे. So I think we are on the right track.
That's really good, sir. And all the best for the future, sir. Thank you.
Yeah, thank you.
Thank you. Our next question is from the line of Aman Shah from GT Investments. Please go ahead.
Yeah, hi. Congratulations on good set of numbers, sir. My first question is, sir, on backhoe loaders, now we are seeing a good traction from last 2-3 quarters. Of course, your guidance is also quite good. What is your outlook now? What are we seeing, like the way the volume growth that is happening? As you said, jitna bikta hai. So that scale benefit is now clearly visible to us in backhoe loaders.
See, obviously our numbers are small. It is a market of 35,000 to 40,000 units. And this year, if everything goes well, we will be in thereabouts of about 1,000 units. Maybe a little less, but in all probability more than that. And we would easily be growing at least 45-50%, if not more. So, this is again a thing that jitna dikhta utna bikta hai. So, thoda dikhna shuru ho gaya, thoda bikna shuru ho gaya. And people are working hard. Our teams are working hard. We're adding on teams. We're adding on new locations, even within the country. We're also focused on export. So I believe that this is one of our segments which can actually be the fastest growing segment for us for the next 5-7 years at least. And we can look at very handsome growth here in this segment on a year-on-year basis. And as an example, even in the current quarter which we have finished, the last quarter, I think on a segment basis, we've been able to clock a 78% growth. So, this is one of, let's say, a really good quarter. But on a whole, I would say 45-50% or more than that is doable. And you're working in the right direction. And I'm sure 2-3 years down the line, it will come to a stage that we will not have to sell it. We will not have to sell the product. The product will sell on its own. So that is the foundation we've been able to lay in the last 2-3 years. And I'm sure with our continued efforts, we'll further increase our market share. From 1-1.5%, we've gone to nearly 3%. And going forward, I think doing 8-10% in the next 3-4-5 years should not be difficult. That means 5,000 units or 4,000 units annually multiplied into the selling price. I'm talking of 1,000-1,500 crores worth of backhoes in the next 3-4 years. I think should be easily doable. If we are able to perform better, it can even be faster than this. And just adding here, we are also working on upgrading this product to international levels with respect to styling and look, feel, fit, feel, finish. And hopefully that project of ours should be over by December, January. So Q4 onwards, the product which we'll be offering in the market would feel like as good as a European product, even for Indian market and even for our exports. So hopefully we'll see even better days in the next financial year.
Okay, great, sir. On exports, currently, just want to know, like, the main product that you would be exporting would be cranes. That would be one question. Second is, you also said in exports we are doing some outsourcing opportunity. So, is it like we are in and then the branding will be done by someone else? Yeah.
Both your questions. First one first. We are currently, with respect to exports, focused on 3 things. One is cranes, second is backhoe loader, and third is tractors. And we are seeing traction all across. And recently we've opened up Turkey also, so we have sent some backhoe loaders, and let's say another 300 odd tractors are scheduled to go within by December. That is the plan of the buyer and our plan. And they are again slightly special, bigger tractors, not the standard ones which are sold in India. They are higher horsepower tractors with cabins and 4-wheel drives. So, like I said, cranes, backhoes, and our tractors, especially the higher range. And with respect to outsourcing, I'm sure all of you are aware that, China has been playing a big role in the outsourcing part of the world for even finished machines. So we have, a reasonable amount of opportunities available on this front. And unfortunately, we were really not taking them forward because we were limited in our capacity to feed our domestic with respect to what we produce, which is our mainstay business. Now with enhanced capacities, I think over the next 2-3 quarters, we'll accelerate this effort. and hopefully we'll start doing some decent products, and one or two of them are really big global opportunities, which could also be in a joint name. So that all commercial things are going on, and hopefully over the next 2-3 quarters we should be able to inform everybody once things go out well. Because the scale and size of the opportunities is huge, what I'm talking about. And even the margin profile is even better than what we are doing currently.
Right. So right now what exports we are doing is not having any outsourcing element in it, right?
No, right now we are practically no. Right now, no. Right now it is direct selling in our own name through our dealers and distributors. It is export of our own products. But now we are talking of making things jointly or making things for somebody else. But that is with respect to the main products. But these companies also produce in their own countries. So to be very frank with you, they are also looking at they are also looking at us to supply them some high-end components and some other things so that they can also save some cost in their respective countries. So it is a mix of complete machines and even at some bigger component levels. And I'm talking of the developed world. So they falls in 3 continents, so I'm sure you can imagine.
Right. Sir, can you give the number of the multi-activity cranes and big tonnage cranes in our crane segment for this quarter?
Can you just repeat your question, please?
Multi-activity cranes, the new product line that we had, and the big tonnage cranes.
Multi-activity, I don't have a ready number in front of me, but I know for sure that we've been averaging around 20 cranes. So every month. So that would be about 60-70 cranes in the last quarter. That is multi-activity cranes. So which would actually come into maybe 3-4% approximately. And for the bigger cranes, let me just calculate for you. And I'm excluding tower cranes here because those are different. So this is, and I think about 22, let's say, the heavy slew cranes. About 22 units of slew cranes we have done in the last quarter, approximately. And we have done about, if I talk of tower cranes, we have done 148 tower cranes and another about 27 mobile tower cranes. So these put together close to about 175 tower cranes and like I mentioned 22 heavy slew cranes.
Okay. So roughly 4-5% is still this multi-activity and big tonnage that is coming from both of them.
Yeah, so out of about 1,700 pick and carry, if I talk of 60-70, so close to about 3-4% is multi-activity. But yes, I think I did mention in my last call, I think over the next 1 or 2 years, this will go to 10-20% at least of the pick and carry space.
And at that level, they should also yield better margins than current company margins?
See, in margin, 2 things are happening. Obviously, multi-activity cranes, they will be margin accretive. But within our pick and carry segment, our core segment, there is upgradation happening. So the 15-ton guys, customers are buying 20 tonners, and the 20-tonner guys are buying 25 tonners, and the 25-tonner guys are buying 30 tonners. And there is also a reason that recently we introduced a 35 tonner. And going forward over the next, let's say, 6 months to 8 months, we'll also have another bigger model. So, even the margin profile and let's say the revenue profile is changing within pick and carry cranes. So, 12 ton 4 years back was the maximum selling category. Now it is a 14-15 ton, which is moving towards 17-20 ton. And you see everything is growing bigger in size. So the pricing and the revenue and the margin, everything is going to is moving in the right direction.
Okay, great. Thank you, sir. Thank you very much.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Suraj Navandar from Sampada Investments. Please go ahead.
Hello, sir. Good evening, sir. So what is our capex numbers that, what is the amount of capex that we are doing?
You are not audible, unfortunately.
Hello, can you hear me?
Yeah, slightly better.
Yeah. So what is the amount of capex that we are doing, brownfield capex?
See, as of now, we are it's close to about 90 crores, can be slightly more, can go up to 100 crores, wherein we are expanding our fabrication facilities. We are, because, we have had enough land available with us over the last 8-10 years. So we are expanding our fabrication capacities. We are expanding our assembly lines. We are setting up some new assembly lines. And we are setting up a standalone facility for the bigger slew cranes, because we intend to do at least 20-30 every month. So in the last quarter, we did 22, but our intention is to take it to 60, 70, 80 units in a quarter. And the market there again is growing, and the market has developed and evolved. So, and in the process, what is also going to happen is that, certain things are moving to new lines, so they will vacate space for certain other things to grow. So on the whole, somewhere we are increasing our capacity by 70-80%, somewhere around 40-50%. And most of this should be in place by December. With respect to backhoe loaders, I think that should also happen by Q4.
Or the land available?
Please go ahead with your question, Mr. Suraj.
Hello?
Yeah.
Yes, sir. Is there any further land available after this capex? Because the kind of the commentary that you are giving, it seems like even next year we'll have to do some capacity expansion.
We will have some more land available, but I would say that we would have used a reasonable portion of it. And we are already in discussion with 2 state governments to take a 50-60 acre chunk at whatever best prices. Just to ensure that after 2 years when we need more land, so what to do.
Right.
We are already under discussion. We are already in advanced stage. So in all probability over the next 2-3 months, either we will move close to our setup, but in the state of UP, or maybe Madhya Pradesh.
Okay. And sir, can you give me debt and cash number in our books as the end of Q1?
I think we hardly have any debt, about 35-40 crores of working capital if at all we are using. And our cash investments are, what is the figure?
455 crores.
455
crores of cash. Okay, great. Thank you, sir.
Yes.
Thank you. Our next question is from the line of Gaurav Gandhi from Glory Tail Capital. Please go ahead, sir.
Hi, sir. Am I audible?
Yes, you are audible.
Yes. Congratulations on the excellent set of numbers. Just one observation. Agriculture division recorded revenue of 75 crore, which is a growth of almost 29% YOY. Even though the sale of agri equipment significantly came down from 976 units to 761 units. Can you explain what has happened here?
Basically, we supplied certain bigger horsepower tractors. So the product mix change happened, first thing. And also some export order got executed along with some army orders, which were again higher horsepower and 4x4. So basically because of the price, the product mix, the overall revenue seems to be good. But in saying this, I think this is going to be maintained now. So now you will see the numbers also up and the price also up going forward.
Great. That's it. Thank you. Great.
Thank you.
I'd just like to add here, Vyom and Luthra Saab, if you can take the next one or two questions, and I'll join back in about 2 minutes.
Sure, sir.
Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Chinmay from MK Global. Please go ahead.
Yeah, hi, sir. I just wanted to know, if you could just give an understanding of the couple of months of Q2 which have gone by. Have we been functioning at 100% capacity utilization? Because sir was previously mentioning that we weren't able to find enough time to focus on the capex and were really busy with the completing the orders. So just wanted to know the capacity utilization.
Yeah, hi Chinmay. So for the crane segment, we have been working at around 85 to 90% of the capacities because practically there are certain inefficiencies in the system. And our capacities generally get defined by the fabrication capabilities that we have. So because we are working at higher utilization levels, we are looking to expand in that area. With respect to the backhoe loaders and the construction equipment, we are working at around close to 55% of our capacity. And agri is currently working at 40 to 45%, and material handling is also close to 70 to 75% of the capacity utilization. So post this expansion, which will happen in the crane segment, specifically for the the higher tonnage cranes like trawler cranes and heavy slew cranes, which will move to a new plant, we will see a capacity expansion also happening for tower cranes as well as forklifts.
All right. Thank you. And the other thing I wanted to know in terms of, the previous fellow person had asked a question regarding the...
If you could be a little bit louder, please.
Yeah, sorry. Am I audible?
You are, but if a little bit louder can be much better.
Am I audible now?
Yeah, much better.
Yeah. I just wanted to know that, in the agriculture division that we have grown by 29% YOY in revenue, if you could maybe just give a much more detailed understanding of how is this going to be sustainable going ahead? Because a lot of the previous quarters we have seen really slow growth in terms of revenue in the agriculture division. So if you could maybe give a picture on that.
Yeah, so Chinmay, we totally accept what you are saying that, we have been slightly lethargic in our agri growth. But over the last 2-3 years, our fundamentals have been put in place. And, our focus is basically on 3 things, which is number 1, strengthening our distribution channel domestically. So, which we feel that now we are in a position to project around 10 to 15% growth annually, which will come from our strengthened distribution channel. This will help us to get some increased coverage for our agri product line. Second, focus is on deepening our product range. So, in the agri, we are coming out with the ultra-light combine. And we have also, developed certain export-focused range of tractors, which are especially in the 50 to 100 HP range. That is where we are seeing some good numbers coming through. And, most importantly, we are focusing on export market, which earlier in the call we have already explained. So, all in all, we firmly believe that our fundamentals are strongly in place for future growth, and what you have just seen in the first quarter is we believe quite sustainable going forward this time.
And Vyom, just to add to what you said and just to specify a little more, I will not take the name of the country, but you've got some confirmed orders to be executed within this year from a reasonably good amount of orders that is for export. And it is slightly unfortunate that the Ghana opportunity did not play out in this year so far. So if that would have happened, then the numbers and the profile of the agri would have started to look very different. And I'm sure if not this year, it starts in quarter 3, quarter 4 will definitely happen in the next year. So that will also be one of the mainstays apart from our domestic increasing, further exports increasing and exports in Ghana increasing.
Yeah, understood. Thank you. The other question which I had was, what are the, in terms of units, if you can maybe give a perspective on the unit expansion that will be happening. I mean, rupees 4,000 is the expansion in terms of the revenue. What will be the expansion in terms of units, if you can maybe give an...
Trains have capacity to produce about 1,000 units in a month. So that will be about 12,000 units annually. Construction equipment, which is currently at about 150 units, we will have capacity to produce about 250 units per month, which is about 3,000 in a year. In metal handling, from 175 forklifts, we'll have capacity to produce about 250 units per month, which is again about 3,000 in a year. And on the agri side, we are even as of today about 40-45% utilized. So I think we have enough space and scope to, continue with. So there is no practically change happening with respect to agri. And in saying this, our tower cranes, where we could produce about 350-400 units. So we will have a capacity which will go up to 800-900 units annually. And crawler crane, truck cranes, where we had a capacity to do about 50 units, that will go to 250 to 300 units annually.
Understood. I just wanted one more clarification. The market expansion that we stated, that we are currently at 3% of the market is held by us. Is that in the domestic?
Can you be a little louder, please, so that your question is very clear?
I'm sorry. Just give me a moment.
Yeah, hello.
Mr. Chinmay? Hello?
I think we can go to the next question and maybe you can come back again.
Okay, sir. Okay. Our next question is from the line of Naman Shah from Monarch Networth Capital Limited. Please go ahead.
Good evening, sir. Congratulations on the good set of numbers.
Thank you.
My first question would be, can you give us some update on the utilization of cash? I read we were looking for some inorganic growth. My question is what kind of acquisition are we open to? Is it specific to India or even global?
To be very frank with you, I'll start with what we had planned. We've already taken over two much smaller companies in the last one and a half years. 1.5 years, I would say. So that is finished. And we were looking at two. One was backward, one was forward. Unfortunately, both of them seem to have fizzled out. The forward one is still there, but it's really not moving anywhere. And apart from that, we are looking at some opportunities within the country, and also, one opportunity outside the country. And then that is why we are creating this war chest, of liquidities to enable us in our organic endeavors as well as inorganic endeavors.
Okay, sir. Thank you.
Thank you. We move to the next question. Our next question is from the line of Surit Deorai from Paladin Capital. Please go ahead.
Yeah, hi, good evening, sir. I have two questions. One is actually a follow-up to the previous participant's question. You said you were looking at an M&A opportunity outside of India. Could you explain what the purpose of that would be?
I would love to, but I would refrain, with respect to our proposed business strategy. But it would be more to utilize a developed country name to sell in the developed countries.
Okay. And
you understood, I think.
Yeah, and actually my second question was something that you mentioned earlier about sourcing opportunity and JVs, and you said it could be a very big opportunity.
Yes.
I was not entirely clear on that, so actually both the questions are very closely tied. So if you could give me some more color on that, that would be very helpful.
Yes. Like I did mention that there are opportunities from the European continent, American, and even, let's say the developed Asian side to tie up together and produce for those countries. And we are working on them, and we are in advanced stages, and I think some of them should go through in the next 2-3 quarters. So that will also help us utilize our capacities which we are creating faster and open up, the export market in a much bigger way, much organized way with consistent schedules, projections and numbers. And it is happening. I think I should not be speaking more than that at this juncture.
That's very helpful, sir. Thank you. You answered my question.
Yes.
Thank you. Our next question is from the line of Chinmay from MK Global. Please go ahead.
Hi, sir. Sorry, I had disconnected. I also just wanted, if you could just please give me the guidance for FY24 once again on the segmental level and maybe on an overall company level.
Yeah, so as of now, company level, we are looking at a 20 to 25% growth. With maybe some more upside, but that we can only confirm by quarter 3. And on the segment level, cranes and agri, we are looking at least 18-20%, and I'm adding the word at least. Metal handling 15 to 20%, and construction equipment 45 to 50%, and again I'm adding the word at least.
Understood, sir. And in terms of margins, we will be able to maintain the double-digit margins going ahead, right?
Yes. What we have delivered in this quarter, I think that is sustainable. 20, 30, 40 basis points here and there, I really can't guarantee, but that is sustainable. Yeah. And with our, other endeavors which are in place with respect to our costs, we have also created a separate team headed by one of veterans in the industry to further work on our costings and our purchase and cost control, where we expect that over the next 2-3 quarters we should get another 1 to 2% advantage on our buying. So similar other endeavors are also already in place. So there is further scope to further better what we are doing.
Just had one last question. The current market share that we have is 3%, and with the potential increase that we'll have in the with the expansion coming in, let's assume if we ramp it up to 100%, then what could be the incremental market share that we could probably acquire with the unit that we are going to set up?
Capacity in construction equipment will go to 3,000 units annually, so that can take us to 8-9% market share.
Okay, 8 to 9% market share.
So this capacity increase which I'm talking about is keeping single shift operation in mind. Yeah. So with a little tweaking, we can easily take it up to maybe even 350, 400, which will translate into even 12 to 13% market share possibility with the facilities that will become functional end of this year for construction.
Thank you. Those are my questions.
Yeah,
thank you. Ladies and gentlemen, you may press star and 1 to ask a question. In order to ask a question, please press star and 1. Our next question is from the line of Naman Shah from Monarch Networth Capital Limited. Please go ahead.
Hi. Our other income is slightly higher this time. Could you give me some breakup of the other income? Like what does it consist of?
Yes, I think Mr. Luthra is the right man, but I'll try and answer. See, what happened in the last year, we were reporting some mark-to-market losses. So which got translated into some mark-to-market benefits in this quarter. And coupled with that, our investment over the last 1 year also increased. So that also provided some extra other inflow. So it is primarily to do with that. Right, Professor?
That's right, sir.
Because even we were looking at it.
Okay. Thank you.
Thank you. Our next question is from the line of Sarika, who's an investor. Please go ahead.
Hi, sir. It's hard to understand the replacement cycle for the forklifts. Could you help me?
Receivable only with respect to forklifts?
Yep.
I think we should be somewhere at about 25, 26 days. With respect to forklifts.
At the industry level.
The receivable?
Replacement cycle.
I think our question is with respect to the replacement cycle of forklift.
I heard receivable. The replacement cycle, ideally a forklift would last, if used for more than 12 hours a day, I think it will conk off in about 6-7 years. And if maintained very well and run less than 12 hours a day, maybe about 8 years. So I think 8 years would be an average replacement life for a forklift.
Okay. So probably if you can help me understand the breakup between the ESG replacement and the fresh demand for this quarter.
I don't think we have analyzed ESG replacement with respect to this, but I know for sure that, with our electric trains, which we had not commercialized only because of, the current load on the plant with respect to regular production. So we are seeing good traction. Even some of the L&T divisions, with respect to their own ESG, they want to move on to electric trains, including Reliance and even Tata. So, but I think we will start to evaluate that once we are into that. But yes, for sure, in the last 1 or 2 years, we have seen more traction in numbers towards electric forklifts that we do. So, in our kitty of forklifts that we do, that has risen to 20-25% in our numbers. And going forward, I think it will go up to 50%. Electric forklifts in our portfolio of, let's say, the numbers that we do for forklifts. Also for the reason that next year the industry will be moving to BS5 standards. And the smaller engine forklifts, the most popular 3-ton, the cost increase is going to make it similar price to an electric forklift. And the option of using electric will eventually become cheaper for the customer because, electricity is cheaper than fuel. So I think going forward, I would say after 1 year, the demand for electric forklifts is further going to increase, and accordingly, we are further strengthening our portfolio of electric forklifts as well as lithium-ion based forklifts.
Thank you, ladies and gentlemen. Due to time constraint, that was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Yes, thank you. I think we have discussed most of everything. The country seems to be in a buoyant scenario. The entire world focus is on India. Manufacturing is growing. Infra is growing. And even for manufacturing and infra, we are indirect beneficiaries with respect to our end customers, mostly being placed in these two segments. And we are looking forward to at least a 20-25% growth in this year with sustained EBITDA margins at 14.5% to 15%, with definitely a scope to, a possibility of upsiding or upscaling from here. And in the last about let's say in FY21, we had planned and thought that we will double up our revenue and take it to 2,500 crores. And I think we are very much on track, and we should be able to exceed that by at least 5, 10, 15%. That time will tell. And again, we have a sense and a feeling that from FY24 and going to FY27, we should be in a position to double up our revenue again, and even better margin profile in place. And, in this year, in the second half, we are looking at the new product introduction and commercialization, our electric crane, our aerial work platforms, and even our 35-tonner pick and carry crane 4x4. And also looking at materializing some, like I mentioned, export outsourcing opportunities. So all in all, I think this year can end up to be one of our best, biggest and brightest years, and lay the foundation for our doubling up process over the next 3 years again. And good evening and thank you. That's all from my side.
Thank you.